how does crude move from here on? For that matter, even gold, these are stocks that are immediately impacted in times of aggression. Mark Keenan, the head of Commodities Research Asia at SocGen, Société Générale, joins in. Good morning, Mark. Thank you very much for joining us. Straight away, that's the question.
Good morning.
What should we be prepared for in terms of crude prices if this aggression or state of aggression lasts for, say, one more week?
Well, I think that yesterday's reaction to the crude price, specifically to Brent crude, was justified in that the prices did move around 2.5% higher. In our view, however, the move in the crude prices has been a little bit overdone because when we examine the details of what's going on, it looks unlikely that there's going to be further price rises as a function of the tension within the Ukraine. The initial concerns and fears were a function really of risks to crude oil moving out of the Black Sea region and through into the Mediterranean. About 5,500 oil tankers a year move through that channel, and there was some concern that if there was an escalation in tensions, that might affect these channels. Later research suggests that of course, it's in everyone's interest, specifically Russia's interest, to ensure that crude oil continues to flow out of the region. And our concerns are more with other commodities, like, for example, natural gas, where a lot of the supply out of Russia moves through the Ukraine into Europe, and also impacting other markets like the grain markets and also gold, as you touched on.
Mark, go ahead.
No, I just wanted to know, therefore, what might be the impact on gas prices?
Well, gas prices already have moved around 10% higher in Europe, looking at the UK natural gas and also grades traded in Holland, in Amsterdam. And because of what happened in 2006 and 2009, when Russia actually cut natural gas supplies into Ukraine, it's a likely channel that this may be something that is possibly revisited going forward. But if we do see that continue, that may have knock-on effects within the distillate market in Europe. We may get a little bit of substitution into gas oil, which may put a little bit of tension on the crude market. But that, in our view, will be quickly eased by releases from, for example, the SPR to quell any excessive price rises as a function of that.
Okay. Mark, hi, good morning. Just for the benefit of our viewers, can you tell us how much oil does Russia in itself produce and how much does it supply? I heard you mention 5,500 oil tankers a year go through that channel, but how important is Russia in the scheme of things? So if there is any disruption in supply, how much would it matter?
Well, Russia produces, exports rather, around 6.5 million barrels of oil a day. It's the second largest exporter in the world after Saudi Arabia. And whilst most of the Russian exports tend to be seaborne exports, and they either move through the Baltic channels in the north and also the Black Sea and Caspian channels, there's a very small proportion of Russian exports that actually travels through the Ukraine. Specifically, there's a single pipeline that moves around 1 million barrels of oil a day. But if the ultimate aim here is for Russia to in some way hurt the Ukraine by cutting off energy supplies, crude oil would be the vehicle of not a good choice to do that, because the crude moves straight through the Ukraine. It doesn't touch any Ukrainian refineries. So there's a very small component that actually goes within the Ukrainian borders, as it were, and most of that, as I say, is seaborne exports.
Okay, so going ahead, if you had to give us some levels to watch for, what could the maximum rise be in crude because of this situation? What could the marker on the upside be?
Well, I think if we focus specifically on the Brent market as the most sensitive of the international benchmarks to the situation, I think that yesterday people were talking about really a maximum of $5 a barrel onto prices as of yesterday, being the sort of risk premium ascribed to the situation. But we only saw around $2.50 yesterday, and since then prices today are easing slightly. So our view is that, as I said, that this is a little bit overdone on the oil side, and we don't really foresee further upside in oil prices as a function of this particular incident.
Okay, let me come to gold. Gold had started moving up well before, maybe about the last 3-4 weeks. We have seen it bottoming out from the sub $1,300 mark. Where is gold headed now?
Well, gold is actually our long-term view on gold is still bearish, and we see prices moving down to around $1,050 an ounce for the end of this year. That said, as you point out, a recent confluence of events within the gold market since the beginning of this year has caused prices to move higher. Originally, we've seen a lot of short covering in the market, which adds some upside strength as people buy back. These are speculators typically that buy back short positions, and they add some price strength through that action. We've also seen a lot of lackluster economic data out of the United States, which suggests, or some speculators have taken to read, that maybe there'll be a pushback or a slowdown in the rate of the tapering in the US, which is supportive for gold prices as well. The difficult thing with that is that much of this data, or much of the disappointment in this data, has been attributed to the extremely harsh weather conditions that we've seen in the United States that have made the data very difficult to interpret.
So at 1350...
in addition to that, of course...
Sorry, no, I just wanted to know, so at 1350, would you be a seller of gold right away? Or do you think that it could see some increases and you would go short after more of a rally?
Yes, now that's a very good question. I personally think that now that we are edging through this 1350 level today, and much of this strength has been ascribed to the escalation of tension in the Ukraine, it's likely we could get slightly higher numbers, and we could push up towards 1400. It was interesting to see yesterday some of the most active options, which are vehicles which a lot of speculators use to capture price moves. The most actively traded strikes were the 1400 strike, suggesting that there is an underlying view that we might spike up towards that level. At those levels, and if we get there, I think that would provide an excellent selling opportunity again, and a resumption of the downtrend down to our overall target at the end of this year of 1,050. So right now I would be pretty cautious and watch it. We're also seeing some on the sidelines, some renewed interest from producer hedging. Producers have been very inactive in the gold market over recent years in terms of hedging production, because very simply there's been very little reason to do so, with prices moving higher year after year after year. Now we're seeing a big increase in that interest, and when we do get higher prices, some producers may look to start locking in production and selling their production forward, which could put a lid on prices, or indeed, if it escalates further, or weaken prices from these levels onwards.
Thank you very much for joining us, Mark, with all those detailed comments on a range of commodities.